Welcome to another episode of CashOps, your go-to channel for navigating through the complexities of the financial world. Today, we're peeling back the layers of a brewing storm in global finance, driven by spiraling inflation and the weakening US dollar. It's more than just turbulence. We're potentially on the verge of an economic upheaval that could redefine our financial future. Imagine standing at the edge of a cliff, the ground trembling underfoot. That's where we find ourselves today in the economic landscape, a precipice that looks over into the murky depths of financial instability. The signals are all around us. Soaring treasury yields, a dollar on a downward spiral, and gold, yes, gold, poised for a remarkable surge. Let's start with a name you might recognize, Peter Schiff, a heavyweight economist whose predictions have stirred the markets more than once. Schiff doesn't just forecast rain, he predicts a storm. He warns that the financial tempest on the horizon is fueled by runaway inflation and a rapidly weakening US dollar, factors that are likely to lead to a catastrophic economic downturn. But why focus on gold? Schiff argues that amidst this chaos, gold stands out as a beacon of stability. As the dollar falters, gold's allure only strengthens, making it a pivotal asset for anyone looking to safeguard their investments against the coming storm. So, why is this important? Because the implications of these economic shifts are profound, not just for investors, but for everyone. When inflation hits, as it inevitably will, every dollar you own will buy less. Every savings account will diminish in real value. And here's where gold comes into play. It's not just an investment. It's insurance against economic instability. And if you're finding this analysis helpful, remember to hit that subscribe button if you haven't already. It helps us bring more content like this to you. Now, you might be asking, how imminent is this threat? According to Schiff, it's not a matter of if, but when. He points to the current strength of the US dollar, which has so far shielded American consumers from the full sting of inflation. However, once the dollar begins to decline, that shield will vanish, and inflation will start taking a more significant toll on purchasing power. This isn't fear-mongering, it's a wake-up call. Schiff's predictions are grounded in current economic indicators that suggest broader issues at play. He notes the rising yields on Treasury bonds, driven not by economic strength, but by the federal government's loss of control over national debt and the Federal Reserve's faltering handle on inflation. But let's talk solutions. It's diversifying your investments, particularly into gold. He argues that gold is not just a commodity, it's a currency that can stand against the tide of inflation and economic mismanagement. By investing in gold, you are essentially placing a bet against economic instability. As we move further into this discussion, it's crucial to understand the global impact of these shifts. A depreciating dollar makes gold cheaper for investors holding other currencies, thereby increasing demand and potentially driving up the price of gold even further. This scenario is crucial, not just for individual investors, but for global economic stability. As we near the end of this video, let's recap. The economic signals are clear, the risks are real, and the solutions, while not simple, are accessible. Investing in gold isn't just about protecting your assets. It's about positioning yourself wisely in a world of financial uncertainty. Remember, the time to act is now, before these predicted upheavals become our grim reality. If you've enjoyed this deep dive into the economic forecast and our discussion on gold investments, please give this video a like. Don't forget to subscribe for more insightful content right here on CashOps, where we equip you with the knowledge to not just survive, but thrive in any financial climate. Thanks for watching, and we'll see you in the next video. Let's further explore the storied role of gold in history as a buffer against economic instability. Throughout centuries, during times of war, economic crisis, and geopolitical uncertainty, gold has consistently emerged as a cornerstone for securing wealth. Its intrinsic value is not reliant on government promises or fiscal policy. making it a unique asset in the financial spectrum. Consider the inflationary spirals of the past. From the oil shocks of the 1970s to the more recent global financial crisis in 2008, gold prices have spiked as confidence in traditional currencies and stocks waned. What makes gold so resilient? It's simple. Unlike fiat currencies, gold cannot be printed or digitally created. Its supply is finite, and its acquisition requires real effort: mining, refining, and certifying. This scarcity and tangibility underpin its perceived value across cultures and eras, making it a global standard of wealth preservation. Now, let's talk about the current geopolitical landscape. Rising tensions in various parts of the world, from Eastern Europe to the South China Sea, not only threaten peace, but also economic stability. Such uncertainties tend to drive investors towards safer assets. Gold, with its reputation as a crisis commodity, attracts more attention during such times, often resulting in price increases. What can you, as an individual investor, do in these uncertain times? First, assess your risk tolerance and financial goals. If safeguarding your wealth from inflation and economic downturns is a priority, consider allocating a portion of your portfolio to gold, whether through physical gold, gold ETFs, or mining stocks. Diversifying your investments can provide a buffer against market volatility. Furthermore, keep a keen eye on economic indicators and global events. The signs of economic stress, such as rising national debts, expansive monetary policies, and inflationary pressures, are not always immediately impactful, but gradually build up. By staying informed, you can anticipate shifts and adjust your investment strategies accordingly. Lastly, engage with a community of informed investors and financial experts. In channels like CashOps, we strive to provide not only forecasts and analysis, but also a platform for dialogue and learning. Sharing insights and strategies with others can offer new perspectives and refine your investment approaches. As we wrap up, remember that the goal here isn't just to survive the financial storm, but to emerge stronger, with your assets intact and your financial future secure. The strategies we discussed today are not just theoretical, they are practical steps that you can start implementing now. Thank you for tuning in to CashOps. If this video has provided you with valuable insights, please like it and share it with others who might benefit. Subscribe for more content that helps you stay ahead in the financial game. Until next time, keep your investments wise and your future secure. We'll see you again soon.